Hi there, thanks for checking in. It's Adam here at Low & Co, and this month we're looking at the real estate info, all the data for the Wellington market in the month of August 2024 versus 1 and 2 years ago, and looking at the trends. In summary, folks, Wellington values have stabilised. They have been falling for quite some time, basically since the election. They've now stabilised in the month of August. Finally, some good news for sellers out there. Message to sellers is the market is now a bit more balanced, a little better, and for buyers, we have reduced stock levels, and so that's making things not quite as great, not quite as easy for you. Conditions are still very, very good for buyers though, so don't muck around getting amongst it. So let's look at the detail. Median sale price, 790,000 in August versus 760,000 a year ago, so that's up 4%. Look at the shape of that graph. You'll see there that, broadly speaking, median prices, I should say, have been about stable since July 2022. So for over 2 years now, we've been tracking broadly sideways, up a little, down a little, and so on. No great trends there really, other than going sideways. But if you follow these videos, you'll know that I don't pay too much attention to the median sale price because it reflects not just the underlying values, but also the mix of properties sold in that time period. The better guide to underlying values themselves is the Real Estate Institute House Price Index, so let's look at that. Here we have the league tables, and Wellington unfortunately still has the auspicious privilege of leading the league tables in that we have fallen further than any other part of the country since the peak in late 2021. A little shy of 25% reduction in values compared to just under 23% for Auckland. So Auckland City not faring that much better, not far behind, and you can see they're dropping to varying degrees across the country, but Wellington unfortunately still is leading the league tables there. Over the last year, Wellington values just below where we were 12 months ago. So throughout 2023, broadly speaking, we were recovering, quite a firm market. Then in 2024, we have gone back again by sort of 5 or 6%. And so on balance, over the last 12 months, just below at 1.5% down in Wellington. Over the last 3 months, Wellington values quite weak at a drop of 2.3%. You'll see there's most of the country is sort of been going backwards ever so slightly, and Wellington is again, unfortunately, one of the areas to fall the furthest over the last 3 months or so. So let's now look at the detail. Wellington there, you'll see, look, 1.5% down over the last 12 months, 2.3% down over the last 3 months, a small recovery of 0.4% over August, so the first time we've actually seen an appreciation in values for quite a number of months there. And you look at the shape of the graph there, you see the blue line showing throughout 2023, we were seeing gradual price appreciation in most months in 2023, throughout 2024, an erosion of values, and then recovered again in August of this year. And if you look there at the last year, you'll see, look, Wellington City and Lower Hutt in particular have been the weakest over the last 12 months. And over the last 3 months, Lower Hutt especially weak, with values having dropped just over 5% over the last 3 months. We look now at Wellington City in particular. So in August, we actually recovered more than the other territorial authorities in the region, at 0.9% up over August. And again, if you look at the shape of that graph there, it's more of a sawtooth. So we see it's a bit more erratic, a bit more volatile. We tend to get slightly deeper troughs and slightly higher peaks in terms of the recoveries and so on. And no different in August. Whilst Wellington region recovered by about 0.4%, Wellington City recovered about 0.9%. So a bit of a steeper incline there in the month of August itself. New listings coming to the market. So we saw 477 come to market in August versus 461 a year ago and 510 2 years ago. So look, a little bit more than we've seen in the last than a year ago, and down 6% on 2 years ago. So not too different there from the last 2 Augusts. But the shape of the graph again is, I think, the most interesting. So we've seen an enormous increase in the number of listings coming to market kind of broadly since the election. Everyone decided at the same time that results have been quite good in 2023. So now that the election is out of the way, let's get our property on the market. Unfortunately, that made things way harder to sell. And so you see there, that's the cause of it, the massive increase in the amount of listings coming to the market. That's new listings. Over the last 3 months, as is typically the case in winter, we've seen new listings come down again, but it has been a significant decline there. And you'll see there in August, the fewest listings we've seen pretty much throughout 2024 for quite a number of months. And then we compare it to what's normal in August. We're seeing fewer listings in August, this past August, than is typically the case. Now that is the first time we've seen that for ages. Typically throughout 2024, we've seen way more listings coming to market than what we normally see during the month. So this is a bit of good news for vendors. We're seeing a real slowdown in the amount of listings coming to the market for the first time in quite a number of months. And there you can see it in a different form. For most of 2024, we've seen significantly more listings coming to market when compared to 12 months prior. But in August, we're pretty much on par with where we were last August. So that is great news for those of you thinking of selling, or indeed those of you who are already on the market. What about the number of sales taking place? So this is a bit of a proxy for demand out there. 562 sales in August versus 533 a year ago, 525 2 years ago. So a few more sales taking place than a year or 2 years ago. And again, you look at the trend there, the red line is showing that we're seeing sales volumes slowly trending upwards reasonably consistently. Look, are we at high levels of sales? No. If you compare it to the level that red line is at over the last sort of 9 or 10 years, by no means is it high, but it is more sales taking place in the last 6 months or so than we have seen for roughly about 2 years. So it's gradually improving out there. And again, if we look there at the August average, even though things have been improving, as I was sort of indicating before, it's not. We're not at high levels yet, and indeed in August we're still below where we would typically be in August at 562 versus an average of 619. And there you see it in a different format. So it's been slightly erratic in terms of volume of sales taking place, but broadly over the last year we've seen more sales taking place, significantly more on average than the same month 12 months prior, with one exception, that being June, and that was just a bit of an outlier. But in August, as I say, only just a few more than we saw 12 months ago. So overall, I'm taking this as a reasonably good news story for those of you who are on the market or thinking of coming to the market. How long is it taking to sell? A long time, basically, folks. 50 days. Now, 50 days is longer than it's taken for quite some time. And so this is the one data point which I'm suggesting is counter to the overall trend of the story. The overall trend of the story is the market has gotten less tough. It's good news or better news for sellers. But this is one data point that actually is saying, actually, no, it's not getting less tough. It's getting more tough. Bit of an outlier here because everything else is reasonably consistent. But there it is, folks. The data doesn't lie. 50 days versus an average of 36 days in August. So certainly considerably longer than is normal. Interestingly, we track this data here at Low & Co too, and the average duration for us selling here at Low & Co is about 31 days in August. So interesting that we're considerably shorter than Wellington region overall. Now, of course, we're operating in the city, and this data you're looking at here is for the region. So that, it's not totally like for like, but reassuring that it's in the city at least we're producing results better than the 50 days on average. Inventory, number of weeks worth of supply on the market. So in August, 14 weeks. Back in July, we had gone up to about 17 weeks. That was the biggest inventory we'd seen in quite some time. So again, encouraging, back down to 14 weeks. The long-term average is 15, so 14 versus 15, only just less than the average. Broadly speaking, I would say compared to long-term averages, that is a balanced market, normal-ish market, normal levels of inventory. Why does it feel so tough then? Perhaps because over the last 9 or 10 years, the average has not been 15. It's been more like 10. So compared to 10, 14 still feels like quite hard work out there. A number of listings on TradeMe, 2534 as of a few days ago when we're recording this versus 1843 a year ago, 2526 2 years ago. So we're still at nearly 40% more than we saw 12 months ago, but almost exactly the same as we saw 2 years ago. Again, the trend is probably most instructive of everything, and that is you see that the blue chart shows that each month it's been coming down, and that is typical as we come into winter. You probably start to see that number starting to come back up again as we head into October now. And the red chart showing there, the red line there showing the 6-month average, it's peaked and coming back down again. Again, generally speaking, overall, this is good news for sellers. The less competition there is out there, the better it is for you, the easier it is to attract the attention of more buyers. And there it is again in another format. So the last sort of 6 or 8 months, we have been seeing more listings on Trade Me as compared to 12 months prior, but the degree to which we're seeing more is now starting to go back down again. And so folks, I've got a bit of Low & Co data here, which is showing activity levels, because of course it's the activity levels that we see in the front line in the marketplace that are the leading indicators for what's happening in the market. And for the last few months I have been saying that activity levels indicate that the market is getting a little better for sellers, and at last month in August I should say, we've just started to see that come through. And so this is interesting here. This is open home traffic. So the red line shows on average the number of attendees at each open home. Now this is at all stages of the process, whether it be the first open home or the 10th or anywhere in between. Don't worry about the gross quantum. What you're looking for here is the trend. And you see over the last 4 months or so, the trend has been definitely up. So interestingly, most people, if you ask them, when's a good time to sell, when's a bad time to sell, they would say winter is a bad time to sell. Weather's not so great, people are in a bit grumpier, that sort of thing. My flowers aren't looking so nice. What the data actually shows is there is more activity per listing as we come into winter. Now why is that? It's simply a function of fewer properties being on the market. So that is what has been leading to the conditions getting a little better for sellers out there. And the next chart there, again, you see the same trend happening. Over the last 4 months or so, we've seen a definite increase in the number of offers on each listing, again as a function of fewer listings on the market, making it easier to compete for the buyers. So just wanted to dispel that myth, folks, that winter is not necessarily a bad time to sell. Often it's actually quite a good time to sell. Obviously, if your home is in a crevice, then it's very, very obvious in winter, and that's an exception to the rule. Anyway, in summary, folks, Wellington values have stabilised in August. Thankfully, a bit of good news for sellers and those considering to sell. New listings have been level versus a year and 2 years ago, but seasonally low, so coming down over the last 4 to 6 months or so. Sales volumes are up slightly, but still below August norms. We've seen a continuing trend of gradually improving sales volumes. Again, good news for sellers. Duration to sell, on the other hand, that's one data point which is bucking the trend. That is long at 50 days, and it has been rising recently. Inventory levels are up versus a year ago, but down recently I should say, over the last 6 months or so. Trade Me listings are up versus a year ago, but seasonally down as we've come into winter. Again, my message to sellers, market has stabilised a bit. It's a bit better than earlier in 2024 when we were really facing quite tough market conditions. For buyers, the message remains the stock levels have been reducing in recent months, and so whilst it's still good from a pricing perspective, there's a little less to choose from out there, perhaps a little more competition. Get out there and make the most of it while these conditions last. Big thanks as always to Real Estate Institute and realestate.co.nz for the data. It's Adam here at Low & Co. Obviously, if you want individualised advice, please reach out. You know how to get me. Otherwise, have a great month. See you next time.